Let's get smart about your money, starting with stocks. Understanding what it truly means to own a stock is the first step toward becoming a confident investor. Stocks aren't just numbers on a screen. When you buy a share, you own a piece of a real company. That share represents a small but genuine ownership stake in the business, no matter how big or small your investment. That means you have a claim on its assets and earnings, and sometimes even voting rights or dividends. As a shareholder, you may get to vote on important company decisions, like electing the board of directors or approving major changes. You buy stocks through regulated exchanges like the NYSE or NASDAQ, not by knocking on a company's door. These exchanges connect buyers and sellers from all over the world, making it easy and secure to invest in companies you believe in. These exchanges are designed for transparency and trust, overseen by organizations like the SEC. Their job is to make sure the market runs fairly, so everyone plays by the same rules. The SEC enforces rules to protect investors, requiring companies to share financial reports so you can make informed decisions. This means you have access to a company's earnings, debts, and future plans before you invest. When you invest in stocks, you're not just hoping for a price jump, you're participating in the company's growth. As the business expands, your share can become more valuable, and you benefit from its success over time. Dividends are your share of the profits, a reward for being an owner. Not all companies pay dividends, but when they do, it's a way of sharing their success directly with you. The system is built on rules and transparency, designed to help you build long-term wealth. By investing wisely and staying informed, you can use stocks as a powerful tool to grow your money over the years, but you need to know those rules before you play. Learning the basics and understanding your rights as a shareholder is key to making smart choices. Owning a stock means owning a real slice of the economy. It's your opportunity to participate in the growth of businesses and ultimately the world around you. Now, let's talk Forex, the world of currency trading. Here, you're not buying ownership. You're betting on the value of one currency against another, like the dollar versus the yen. The Forex market is global, decentralized, and runs 24 hours a day, 5 days a week. It's the most liquid market on Earth, but it's also fast-moving and highly leveraged. Leverage lets you control big trades with little money, amplifying both gains and losses. Regulation is patchy. Different countries have different rules, and oversight is weaker than in stocks. That means more responsibility falls on you to choose a trustworthy broker. In Forex, you're in a high-speed, high-risk environment with less protection. Know the risks before you dive in. Now for the wildest ride in the world of finance, cryptocurrency. It's a space where fortunes can be made or lost in the blink of an eye, and the rules are being written as we go. Buying crypto like Bitcoin isn't like buying shares of a company or even a traditional currency. It's about owning a digital token that exists on a decentralized network, outside the control of any government or bank. The value of these tokens is driven by supply, demand, and, perhaps most importantly, belief in the underlying technology. Blockchain. This technology promises transparency and security, but it's still new and evolving. There's no central authority or customer service to call if something goes wrong. If you lose your private keys, your money is gone forever. No one can help you recover it. Crypto is infamous for its extreme volatility. Prices can skyrocket or crash within hours. Huge gains and devastating losses can happen in a single day, making it a roller coaster for investors. For every story of an overnight millionaire, there are countless tales of people losing everything they put in. The emotional highs and lows are intense, and the risks are real. The market is largely unregulated, with frequent hacks, scams, and security breaches. Without oversight, bad actors can take advantage of unsuspecting investors. The protections you expect in the stock market, like insurance, regulation, and customer support, simply don't exist here. You're truly on your own. In this high-risk, high-reward landscape, every decision is yours alone. There's no safety net, and the stakes can be life-changing. At its core, crypto is speculation, not traditional investing. It's more like gambling than building wealth over time. So, only risk what you can truly afford to lose, and always approach crypto with caution and a clear plan. So, what do you really own in each market? When you invest your hard-earned money, it's important to understand what's actually behind your investment, what you're entitled to, and what risks you're taking on. With stocks, you own a piece of a real business, its assets, profits, and future growth. This means you're a partial owner, with a claim on the company's earnings, and sometimes even a say in how it's run. If the company thrives, your investment grows. You benefit from dividends, share price appreciation, and the company's long-term success. In Forex, you don't own anything tangible. You're betting on the future exchange rate between two currencies. It's more like a wager on which economy will outperform the other rather than ownership of a physical asset. Success depends on global economic forces, interest rates, and geopolitical events, not company performance or profits. With crypto, you own a digital entry on a blockchain. No revenue, no dividends, just scarcity and belief. There's no underlying business, just a decentralized network and a limited supply. Its value is based on faith in the technology, the strength of the community, and hopes for future adoption and innovation. Stocks are productive assets that generate value. Forex is speculation on the strength of entire economies. Crypto is a bet on technology, scarcity, and the power of decentralized systems. Each market is fundamentally different in what you own, how you profit, and why it has value. Your approach and expectations should reflect these differences. Understanding these differences is crucial before investing. It helps you make smarter choices and avoid surprises down the road. Know exactly what you're buying, and make sure it matches your goals and risk tolerance. The trading experience varies wildly between these markets. Stocks trade on set hours, giving you structure and time to think. Forex runs 24/5, and crypto never sleeps, 24/7, 365 days a year. This always-on nature can be exciting, but also stressful and exhausting. Stock market volatility is usually mild. A big day is a 2 to 3% move. Forex moves are smaller, but leverage makes them risky. Crypto, double-digit swings in a day are normal. The risk and emotional toll increase as you move from stocks to Forex to crypto. You need discipline and the right mindset for each. Don't treat them the same. Who's protecting your money? In stocks, you have strong regulation. Companies disclose finances, brokers are monitored, and the SEC enforces rules. There's even insurance if your brokerage fails. Forex is less clear. US brokers are regulated, but many traders use offshore brokers with little oversight. If something goes wrong with an offshore broker, your money could vanish. Crypto is the riskiest. Exchanges aren't held to the same standards, and there's no insurance. Hacks, scams, and exchange failures are common. Each market has different risks: business risk in stocks, counterparty risk in Forex, and security risk in crypto. Assess your risk tolerance before investing. Protection varies. Know what you're getting into. So, what's the bottom line? Stocks, Forex, and crypto are completely different, each with unique risks and rewards. The biggest mistake is jumping in without understanding what you're buying. Don't chase hype or promises of easy money. That's gambling, not investing. The real path to financial security is knowledge and discipline. Invest in your education first. Read, learn, and understand each market. Know the difference between owning an asset and speculating on price. Make decisions based on your goals and risk tolerance, not fear or greed. No one cares more about your money than you do. Get smart, stay patient, and take control of your financial future.